All right, bulls and bears, humans. It is October 28th, 2021, just a few days from the end of October. October being the first month of the fourth quarter. And to me, it's pretty amazing that we're only a couple of months away from the end of the year. What do we have in store for the last couple months here of the year? Well, things we need to be really looking at here, need to be concerned about. All the things that we've been talking about here on this channel are continuing to accelerate. The rising prices, the shortages not getting resolved, the situation with manufacturing, our dependence on importing goods, the job losses are not looking so good. A lot of people are leaving the labor force or choosing not to participate. So in my opinion, we have to be really, really cautious, be very careful about taking on debt, about spending money unnecessarily. If you have a car that still runs good, you might want to keep that sucker going until you absolutely cannot drive it anymore. Keep the maintenance going, take care of it. If you're going to buy a car that's going to last you a long time, one that's reputable, that has a track record of being very reliable. Take a look at some concerning numbers here that just came out. This is out of CNBC. Economic growth rate slows to 2% on a sharp slowdown in consumer spending. So connect the dots here. Even though people are running up record credit card debt, we're still seeing a sharp slowdown in consumer spending. So what does that tell you? That tells me that people are most likely taking on debt when they used to be able to pay in cash, or maybe they used to be able to swipe a debit card because they had the money available. But now they're just taking on debt because the money's not available. But we're still seeing this big slowdown in consumer spending. Now, first of all, think about what they're defining here as economic growth. Economic growth is basically defined as how much consumers spend. And it doesn't matter if they're spending it with money they actually have in savings or with just debt, just swiping a credit card or borrowing money. Either way, it's looked at as growth. So even with record credit card debt run-ups, economic growth is still slowing down. What does that tell you? And let's go back to this article. This is out of creditcards.com. Card balances continued upward in August, the Fed reports. We're now past $1 trillion for consumer credit card debt total. $1 trillion in credit card debt. Now, things have held together surprisingly well so far. Now, if there was going to be a finish line for this, if there was going to be an end date where we could point to, we could tell you, okay, everything's going to be fixed, things are going to start getting better. People are not going to have to rely on taking out debt just to survive, but that's not happening. So ultimately, we're going to start seeing rises in bankruptcies and big rises. I think this is going to be a record breaker once things finally are allowed to start unfolding. Remember, we've had record intervention, record rescue programs, rescue bailouts for the banks. They don't call them bailouts anymore. All they do now is just take away the reserve requirement and open up all access to the Fed window instead of calling them bailouts. But it's QE to infinity. And, even with this, we're still seeing this slowdown in economic growth and consumer spending. And imagine how much bigger the slowdown would have been in spending and what they're calling economic growth if it were not for the enormous rise in credit card and other debt. The U.S. posts weakest growth of the recovery. Well, they're calling this of a recovery. It's pretty much just a recovery of debt for a lot of people. And prices are looking to continue to rise. Let's talk about the chip shortage and the price of automobiles, cars, and trucks. Wall Street Journal is reporting global chip shortage is far from over as wait times get longer. Not getting shorter, not improving, but getting worse. Wait times are getting longer, just like we told you. We warned you about this many, many months ago when this first started unfolding, that things are going to likely continue to get worse. Wait times are getting longer, and this is going to have an effect on manufacturing. It's going to be a continued supply crunch for automobiles. And what does that mean? Well, banks are loaning out money. People can buy these vehicles just by borrowing money. And there's not enough supply out there. So prices are going to have to continue to rise. Right, out of MoneyWeb, chip crunch hits customers like never before a year into the crisis. Right, we told you back when this first started a year ago that this chip shortage was not an easy fix. And this is continuing, and it doesn't look like it's going to be alleviated anytime soon. So anyone sitting waiting for lower prices, like I said back at the beginning, you might want to think about what you're doing. Keep your vehicle running as long as possible. I have a couple vehicles that are paid off, thank goodness. My newest one is actually a 2014, and I know some of you are probably laughing at me for now, but focus on keeping them maintained, keeping them running. And they're the type of vehicles that are going to last me. If I take care of them, they're going to last me 200,000 miles plus for each one of these vehicles. All right, now I tend to stick with Toyotas and Hondas, but I talked to a mechanic a few weeks ago. He has a Ford with 400,000, close to 400,000 miles on it. And of course, he's a mechanic. He takes extra good care of his vehicles. But this was an older vehicle that he just kept going. Original engine, original transmission. Somehow that's been an amazing vehicle for that individual. Now back to the manufacturing here. The chip shortage is affecting the bottom line here. Just this week, General Motors reported a 25% drop in revenue and admitted shortages would cripple performance into next year. Right? So what about the people that are working for these car manufacturers? Are they going to be getting big pay raises, enough to keep up with the rising cost of living, when their company is reporting a 25% drop in revenue? Right, remember what the money printers said. They came out and said that this was transitory, that this price increase, this inflation, was short term. Now here we are, a year plus beyond the onset of this, and it looks like they wanted people to just not worry, go out, continue to spend money, continue to take vacations, continue to spend, consume, and look where we're at right now. No sign of things letting up. In fact, things look to be getting possibly worse when it comes to the cost of living. So what I would recommend is be cautious. Look where you can invest. People ask me what I'm investing in. I'm in and out of different stocks here every few weeks. I do something called swing trading. So to try to keep up and let everybody know what I'm buying and selling, it would take longer for me to do that than actually the buying and selling of the stocks. But I'm in stocks, I'm in ETFs, I'm in other assets. Getting rich, not so much. Keeping up with the cost of living, yeah, for now. We'll see how it goes, but I hope you're doing well. Please let me know what you think down in the comments about this chip shortage. Are you going out and maybe buying a vehicle because you're afraid prices are going to go even higher? Kind of like we saw a lot of the FOMO in the housing market? Or are you holding on to your vehicle? Is it paid off and you're just going to keep it running? Please let me know down in the comments. Also, what do you think about the slowdown in economic growth? Even with all the people running up credit card debt, $1 trillion now in debt, still economic growth is looking pretty weak. Please let me know. Thanks everybody for being here. Stay well, stay safe, keep stacking, stay positive, stay healthy. Bye for now.